tenterhooks. I think that's the phrase, right? As far as pins and needles, waiting to see what he would say. And his change in tone was really well received by the markets.
Great. Okay. So it was a quick reaction then in the markets as well.
Yes. Yeah.
Great. Let's talk about some economic trends that we're seeing, and we'll start with housing.
Yeah, housing has really been in the doldrums. A couple years ago, if you remember, I think people were calling it a seller's market because prices were rising. Not a lot of people were putting their houses on the market. With high interest rates, there was this, what was called a lock-in effect. If you had a mortgage of 2%, 3%, 4%, why would you want to sell it and take on a mortgage of 7 or 8%, right? So there wasn't a lot of supply on the market, but still people wanted to move. There were job relocations, people also wanting to get out of cities into suburbs and all that. And so it was pushing prices higher. Well, things have changed quite a bit over the last year. With interest rates where they are and a little bit more moderation of the demand for housing, there's more supply coming on as well. So people are being like, at some point I do need to downsize, right? Or right size the house that you're in. And that has meant that you've got more supply coming on. You have fewer people buying, being able to afford because of high interest rates, and it's not creating a very good environment.
Now, you're a dog walker. I'm a dog walker, and we've got great paths that we follow. I'll see houses come on the market, and I'll see them sell fairly quickly. Not a whole lot is lingering. Getting back to the pandemic, who was really having a good time at that time would be contractors, because people were putting money into their homes.
That's right. Yep.
So
they would do the renovations. That's where we got the National Association of Home Builders with their sentiment index. It's very low. It's almost like a pessimism index, and they've been talking about the supply and demand dynamic, but there were signs of hope there. So even though the number itself indicated that housing is kind of stuck in the dumps here, they were indicating that they do see signs of more activity, people being willing to actually kind of fork over a little bit more money for those mortgages. Now, if the Fed is going to start cutting, let's see what happens to interest rates. But the biggest problem that they've been complaining about continues to be a very long-standing issue, which is location, location, location. What do you do with buildable land? Where can you build? And what are the zoning regulations? So that's a really interesting thing that they're going to have to struggle with for a while.
Right. So that's an issue for home builders, for some of those larger companies, because existing homes, what are you going to do? You're right. So let's talk a little bit about housing related stocks.
Yeah. The biggest ones. So Toll Brothers, luxury company, as far as with builders, they said that a lot of their clients tend to be cash paying clients because they sold a home and then they can afford to pay cash. Still, their stock was hit because the new orders really fell off. But again, the guidance that they gave was fairly positive, saying that they're seeing a change in the trend. Then we have perhaps my two favorite to look at, Home Depot and Lowe's. I tend to go to one of those or an Ace Hardware just about every single weekend. And they were saying that people seem to be putting off the bigger ticket renovation projects, instead tackling some of those smaller ticket item projects around the house instead. So, maybe swapping out an outlet instead of putting in a rec room.
What was really good about, again, going back into the pandemic era, was that lots of tradespeople, lots of renovators were doing pretty well. If this projects are smaller, that slows down, and there's a downstream effect to that.
There is, and that's the employment effect. Interestingly, in the construction area, so when we looked at the number of people employed in construction, that unfortunately has been declining. So it's about, what's the apprenticeship program like, the licensing, the credentialing program as well. Imagine if you're a plumber or an electrician, as far as can you transport that license that you have to a different geographic location. Again, that is like one of these long-standing issues. But in terms of construction spending, we could see that pick up because of the One Big Beautiful Bill and some of the tax incentives in there. The problem is, are you going to have the people to do the work? Because you haven't seen the employment pick up.
Well, and that's the problem. The trades get hit. People don't go into it. Then all of a sudden we need all sorts of people in the trades, and there's not enough. And some of these, and I'm saying guys, but some of these people are retiring.
Sure. Oh, yeah. Well, yeah. And then are they passing on that institutional knowledge that they have to the next generation? We talk about that in the wealth management area as well. You've got the first generation, you've got the second generation, right? So the handoff from generation 1 to generation 2, they've been dealing with that for years in the trades. I know my brother-in-law, he's a fantastic craftsman. He does all sorts of great work. And he has been talking about that not just within the trades, but the suppliers as well. Some of these the ones who provide, the softwood lumber, all sorts of the supplies that he goes to, even the knowledge that they have there as far as the people willing to be trained or them willing to do the training to bring the people on. It's going to be interesting to see how this plays out over the next couple of years when you have this maybe flood of money coming in looking to do projects, but maybe not the people to actually do them.
Let's talk about labor. What's the latest?
Oh, yeah. In terms of the labor market, keep in mind, labor market indicators are lagging. So in economics, we talk about, is an economic indicator a leading, coincident, or lagging indicator about what's going on with the broader economic cycle? So labor market indicators are lagging in the sense that if you think about a business, they want to hold on to their employers as long as they can because they don't know if a temporary slowdown is just temporary or is it more permanent. They also tend to be a little bit more hesitant when it comes time to hire. And what we've seen in the data is that initial unemployment claims have moved up, so more people filing for unemployment. It's not at a worrying level or anything like that, but it has moved higher. The little bit more worrying thing is the continuing claims. So the number of people who are getting claims for multiple weeks in a row, suggesting that they're having a harder time finding jobs.